up, everybody? Good morning. Welcome aboard to Trading with Bubba. And of course, the markets suck. There is, very wild little action. It's kind of an oxymoron, but there's been some big moves, but with a lack of real activity or a lack of any real follow through. As we take a quick peek and go take a look at what's going on at the in the S&P. You're now you reached resistance, and of course you're failing and falling back and now trying to rally once again. I would think we'd be looking to maybe sell some call spreads up against in here. It doesn't look like we're getting ready to break out, but you do have a lot of news this week. You had ISM this morning, which caused a little bit of a spike, and you've got ADP jobs tomorrow, and of course a big jobs number on Friday. But we're really just in a market that is kind of consolidating, as well as the Dow, which had broken out. And of course, the Dow is now coming back to support. So in the Dow's case, or the diamonds, we'd be looking to sell some put spreads. Again, one of the things we'd like to do is find opportunity to at least take some low risk trades by selling credit, selling put spreads, selling call spreads, while we're waiting to get what we would expect to be a much better move with some more follow through. The Russell is again reaching that resistance level, and of course it is down today, which makes a lot of sense when you just look at the overall chart itself. You knew that it was going up way too fast. You knew that it was well overbought. So again, that does not assure you or guarantee that it's going to be a winning trade, but at least you have yourself in a high probability position that says it could be a trade. And of course, the NASDAQ, after going to support yesterday, see, and now we're popping right back, and you're in this really tight consolidation. Now, interestingly enough, when you see these really tight consolidation moves that have a direction attached to them, you then end up seeing something like what happens in Bitcoin, that it breaks out and goes straight up, okay, or straight down. Again, the direction is not determined yet, but again, the tighter that rubber band winds, the more likely it is to have a big move. And of course, if we look at some of the stocks we've been following, Apple is breaking up to the upside now towards that resistance at about 195. Okay, this I would watch here. And if 195 starts to fail, I would look to sell some call spreads here. Again, until these things get out of these consolidation ranges, there's no real reason to try to be overly active. I think too many traders make the mistake of being overly active. Amazon, same thing, right? We're reaching up against the upper end of a consolidation period that's so far lasting 8 to 10 days. Coin is breaking out. Now, again, coin, you have to, if you want to trade coin from here, you need to find a spot to sell some call spreads. Again, the parabolic move up has been way too sharp. And of course, last week we put a trade on that actually came right back in and cashed out as a profit. But again, there is no guarantee, but all we're trying to do is put the probability in our favor to allow the trade to work and taking the high probability side of the trade. Because again, we don't care where it goes in 2 weeks from now. All we're worried about is the next few days, because of course we do have weekly expirations that we can play these off of. Meta is stuck in the middle between 300 and 340, which we talked about. It reached 340. We thought that it would be a sale up there, and here it is back down to 320. So once again, it's the same. The concept is the same. The product is really not really important. It is the pattern that you're watching. It is the chart that you're watching that makes the difference. And of course, Google, which is looks like it's kind of reversed to the down, and it has. So now Google, you'd be looking at about 133 if it gets back to there. And again, what you want to see, and this is how I do it during the futures trading, I want to see a sharp move either up or down on in this case, it's 4 minutes. Okay. And then after I see that move, okay, then I want to go to a secondary time frame. So in this case, it's 1 minute, because that's the trigger time frame that tells me. Now, right now, I don't have anything that I'd really want to trade on a short-term basis. The one caveat, maybe the Dow, but it's really not enough volume for me. What I want to see is a spike in volume like this. Okay. I want to see a spike in volume like this. Okay. You can see all the areas, and those trades actually happen to work. And since I did make those trades, I can say that yes, they did work. But I don't normally like to talk about trades that I did not make. Okay. So at the end of the day, okay, that's what we're looking for. But again, the time frame we're looking here is a much longer, which is a daily. So a daily, you wouldn't be using a 1 minute. You'd probably use like an hourly to go with the daily, or a 30-minute, to make sure that the level that you're seeing it reach actually has made this the spot and the stop of where it looks like it's no more room to go in that direction. And what we're looking at today is mostly higher, but let's see what the rest of them look like. IWM, again, that's in the middle of nowhere. So really, the future was up at resistance, but the equity has not gotten there yet. Microsoft, again, came down to support and is now popping up a little bit. So right now in the middle of nowhere, nothing really to do. NVIDIA, again, came right down to dead nuts support. Again, another opportunity to sell some put spreads. Remember, when you're playing a probability model, which is really what you're playing, okay, you should be, okay, you're looking for these areas to take advantage of markets in each individual spot. And sometimes you're going to be looking for the runner, and you're going to go to buying calls or buying stock or creating synthetics. But right now, with the very choppy conditions in these markets, we're really just looking to take advantage and collect some premium. Okay. The Qs, again, kind of in that middle of nowhere. The actual equity itself has not actually mirrored exactly the future. Square reached resistance. So here would be a spot to sell some potential call spreads. Now, again, there's three things to always remember. Number one, you don't have to trade. No trade is a trade, and don't be in a hurry. Okay, the markets are going to be here 241 days a year. They're always open. So we don't have to rush into trades if we're not comfortable with the setups that we see. The spiders, they're kind of hovering. I mean, again, they'd be more of a potential put spread sale than a call spread sale, because you look like you're on support. Okay. Tesla breaking out of this tight little range, but that's really just a tight little nothing area. I'm looking either for an expansion up to about 260 or a breakdown to about 220. Okay, before I really want to get involved. This is kind of in the middle. Win continues to work its way lower. So every opportunity to get a rally and like a win, you'd want to sell put spreads. And I think this is what you have to remember as you look at markets, as you trade markets. It's what can you mentally and emotionally handle comfortably, okay, without getting yourself in knots, right? And without making yourself crazy, okay? It's all about the market itself. It's all about the trade. And what are you comfortable with? What is your risk tolerance, your exposure? Because everybody's a little bit different when it comes to that. So, actually, we're going to watch a little bit of the futures market while we're talking, and we're going to see if something shows up. As you know, if you've been here before, you know that I will trade and make a trade if there's a trade to be made. Right now, I don't have a trade to be made because the markets are basically sound asleep as I look. Okay, and as we're looking together, there isn't much going on. So again, this is a great time. In markets like this, you should be looking for opportunity, and B, you should be studying, how do I find those opportunities? And that just goes back to, looking at your chart patterns and looking at, continuing to roll through certain things that you have. But we don't really have anything that is setting up. Crude oil has a potential to set up here, but I don't think the volume's going to be there. You kind of get used to it. And then if you do all that, then there's what we call anticipation. Okay, you can anticipate the move. Now, again, you don't want to make the trade early, but what you want to be able to do is alert yourself that trade may be happening. And right now, as I take a quick scan across these 8 different markets, I don't see anything that's really going to happen anytime soon here. So I'm not really all that happy. I'm not staring at it, because what I do know, okay, and this is one of the things I like to do. If I draw this line here, okay, I know that I'm not making a trade in the Dow, for example, until the volume gets up to there. Now, it may still not be a trade even with the volume there, because I need the price to be up or down to match that move, right? It needs to be like what you have here, straight up volume, straight up price, okay? Or straight down volume, okay? And then straight down price, straight down volume. So again, they've got to be in congruence together to make me want to make that trade. So nothing is really setting up right now, but like I said, I do know is I don't have to really stare at it. I know that these are areas I'm waiting for volume to show up to. If I don't see volume up there, then I'm not even looking. Okay, I'm not going to make a trade there until those events occur. So it would have to take a lot of emotion, a lot of panic, or a lot of chasing to get these markets to do it. And that's one of the things you also have to remember is that basically, if you're trading the way that I'm teaching you, you're trading against or off the emotion of others. Okay. And we know that trading can be a very emotional business. So you have to be willing to, when somebody's begging for it, give them what they want, right? If they're panicking, okay, buy it from them. If they're chasing the market higher, sell it to them because they're going to be wrong. Okay. That is just the typical theory that we go by. It's like the old floor trading saying, when you can see their tonsils, give them whatever they want, okay, because they're wrong. And again, here we have just a very, very quiet market that is not doing a heck of a lot. So if the market's not doing a heck of a lot, why should I be doing a heck of a lot? Okay, I don't need to put myself in danger. So again, if we go back to the bigger picture, we go back to what we were talking about. So Apple, again, I'd be watching Apple and I'd put Apple maybe on a 30-minute chart, right? And see, okay, so right now, if this 30-minute bar closes in the red, okay, it has not, it's still got 20 minutes to go. But if this closes in the red, it would probably be an indication for me to sell some call spreads, okay? Amazon is still a green, so there's nothing for me to look at here. Coin, again, this is a different case. This is a blowout trade, which is certainly, but if this does turn to red here and close the next 30 minutes lower, then I would be looking to sell call spreads here. And again, it goes all the way down here. I'd be looking to sell call spreads again, right? And again, this is nothing changes except for the time. But if you understand the world of charting, each candle, in this case, we're looking at candles, but each candle is nothing more than an indication of price and time anyways. It doesn't matter what I'm looking at. It's all about price and time, okay? And that is, so that the time frame that I'm trading is all that I'm really concerned about. So it comes down to, once again, the price and the time that allow me the opportunity to make and give me the biggest amount of probability that the trade is going to be a winner. Okay. So here again, from the short-term trading perspective, I've got nothing to really do. Okay. Now it looks like there might be something potentially setting up, but I don't know that the volume's going to get there. Again, I have to have both to make the trade that we're talking about now. I have to have both components in play to let me make that trade. If I don't get both components, then I'm probably not going to make that trade because, again, it doesn't make sense to me to jump into the market that is not really busy enough or enough. I'm not going to get the reverse reaction, which will create what we call the V shape. Again, if this were a trade, it was not, but this is what I'm looking for. If it's a down, I'm looking for the down V. Okay. If it's up, I'm looking for the up V, right? So remember, that's if you're looking at this particular pattern, that's what we're looking for. The other ones we're looking for more specific levels, okay, based on the longer term chart. And there's a difference, longer term, short term, and your trading time frame has to commensurate with the chart that you're trading. Your trade should have nothing to do with what the ISM services number was this morning. It should have nothing to do with what ADP jobs is tomorrow. It should be all based on what the footprint of the chart of the market is showing you. That's as simple as that. It comes down to the actual chart itself, the market itself, okay, because that's all we really have to give us the correct information, because that is showing you the prices as they are moving. Okay, look at the bond market, for example. It is going parabolically higher. Okay, This would be one that if I was watching it on a 30-minute chart, and then I would use, let's say, a 5-minute chart to go to 30. As soon as this turned red, I'd be willing to sell it based on the 5-minute. But I need a trigger time frame first. So in this case, the trigger is 30 minutes. Okay, but again, it can be whatever you want it to be. You can your time frames. Okay, the long time frame is what you choose it to be. I use 4 and 1 for my day trading. I use daily and hourly for my swing trading, but there are times I'll use in between. But whatever you want, you need one time frame to tell you that there's something to do, and a secondary time frame to trigger a trade that you're going to make. Okay. Now I will say this to you: the shorter the trigger time frame is, okay, the more trades that you will create. Okay. So, but you don't want to get, you don't want to get too crazy, like use a daily and a 1 minute. That doesn't make sense. Okay. But, again, to me, if I was using a daily, the shortest I would use would be a 30-minute. Okay. If I was using a 10-minute, I would go as short as 2 minutes. So again, it's really, there is some kind of sort of a correlation between the two. But right now, again, there's not much to do. So let's just go back here and see if there's anything to do here. And, there's not a hell of a lot to do here right now. It looks like potentially that the NASDAQ is potentially setting up for something. Okay. Is it? Again, I'm not saying it is or it isn't. I'm just saying that it was certainly something to look at. And again, if I was really busy, I would have looked at potentially being a buyer here. But it's not that busy. So I am not going to step out, okay, in a market that is as quiet as it is right now. Okay. There are times when you can make exceptions, and there is times when you don't make exceptions. And I don't think this is the time to make exceptions. I think it's too quiet, it's too whippy, and the moves are too swift, especially if any little bit of news item pops out that drives the markets. They can drive them for you or against you. But we are not here to take coin flip situations. We are here to be getting a price of, let's say, 6 to 5 on every trade we make. We want to have a percentage of be the favorite to cash on every trade, not trying to outguess and decide based on, some lucky star or something, of that nature. Again, this is all about your own self and all about your protection of how you put yourself in the best position. So we're watching here as we look, and we'll actually be here until the end of this bar, and maybe there'll be a trader. Maybe there'll be something to trade. Again, I don't know if there will or won't. I don't know, but I will certainly, as you know, if you've traded with me before and you've been here before, you know that I'm not afraid to fire with real money while we're here together. Okay. But I don't see that overwhelming opportunity that says that I want to drive into this right now. And that's, again, the discipline and patience that it takes to be a real trader, is to say, hey, I can sit back and patiently wait. I don't have to jump in on every single trade because I may not be successful on every single trade. And I already know that I'm not. Okay. So the NASDAQ looks like it's getting very close, okay, to being a potential buy, along with the S&P, along with the Dow. But now it is my decision. Do I want to expose myself to the risk that I have to take right now based on the overall current conditions of the market? Okay. And my answer is right now, no, I don't want to expose myself because I'm not getting enough activity or action to go ahead and fire up here. It's nice to see the action that's here, but I'm not going to force myself into a market. And I hope that you take that as good, solid advice, not the forced trades. In the meantime, we'll see you back here on Thursday. Have a great day, everybody. And don't forget, I do a daily update every day for you as well, about 1:20. So in the meantime, have a great day, everybody. We'll see you later.